recording this feature, so if you've got to step away, you'll get a blue link within the next 24 hours. So let's talk about investment strategists briefly. So on the CFA Institute member directory, we have 5,961 investment strategists who are CFA charter holders. If you go on the Bloomberg People directory, you see about 12% of the strategists there listed say they have the CFA charter. I'm guessing there are about 40,000 or so investment strategists globally. Not a huge segment, not a tiny segment, but a very high-profile client-facing role. So we're really excited to be touching upon it. So they give thought leadership, in particular, to both the buy side, and the sell side to some extent. And the strategists will help people think through tactical asset allocation, strategic asset allocation, portfolio construction, tilts, timing, sizing of bets, and so on, anything related to the movements of the financial markets. You'll frequently see strategists quoted in publications like the FT, the Wall Street Journal, Bloomberg, The Economist, and so on. That's been true since the mid-1990s when I started my career. And anybody who watches the main network television channels, Bloomberg TV or CNBC, has probably seen one, if not all, of the three guests we have on today. So looking at job titles, it's kind of interesting. It's not a very clear segment in some respects. So lots of people use the word strategist in their job title. You've got strategists who label by asset class, like an equity strategist or a fixed income strategist, a currency strategist. You'll have geographic focus, like an APAC strategist or an emerging market strategist. You have other focuses like macro strategists, portfolio strategists, quantitative strategists, and then some more generic titles, simply investment strategist or market strategist. So there are lots of different flavors. And joining me today are three esteemed guests who are currently investment strategists. They have volunteered to join in their personal capacity. They'll be not representing their firms today, but instead sharing their career insights from their chosen profession. So let's begin and introduce our three guests. So first of all, we have Gina Martin-Adams, CFA. She is Global Director of Portfolio Strategy and Chief Equity Strategist at Bloomberg Intelligence. Now, Bloomberg Intelligence is a unique research platform, provides context on markets, industries, companies, and government policy. Now, Gina provides top-down perspective on the equity market, sectors and industries with a multidisciplined approach that utilizes all of fundamental, quantitative, and technical analysis. She frequently presents her views at industry conferences, professional associations, and investment organizations, and has been recognized for portfolio strategy, technical strategy, and economics in Institutional Investors All-America Research Survey, very prestigious survey. Prior to joining Bloomberg, she was the head of US equity strategy for Wells Fargo Securities. And Mrs. Adams has a Bachelor's of Science degree in Business Administration with concentration in finance and marketing from University of Florida. She holds the Chartered Financial Analyst designation and Chartered Market Technician designation. She's a member of CFA Institute and also CFA Society New York, and is on the board of directors of CMT Association, also a member of the Financial Women's Association and 100 Women in Finance. Welcome, Gina.
Thank you for having me.
Okay, next up, we have Dr. David Kelly, who is Chief Global Strategist and Head of Global Market Insight Strategy Team for JP Morgan Asset Management. With over 25 years of experience, David provides a valuable insight and perspective on the economy and markets to the institutional investor and financial advisor global communities. His research focuses on the investment implications of an evolving economic environment, and he's written extensively on all aspects of the US economy, and his proprietary US economic forecasting model helps shape his views on both the economic landscape and prospective asset class returns. He currently sits on JP Morgan Fund's operating committee, and throughout his career, he's developed a unique ability to explain complex economic and market issues in a language that finance professionals can use to communicate to their clients. He is a keynote speaker at many national investment conferences and a frequent guest on CNBC, Bloomberg Television, and other financial media outlets. He is a CFA charter holder. He also has a PhD and MA in economics from Michigan State University and a BA in economics from University College Dublin in the Republic of Ireland. Welcome, David.
Very glad to be here.
Okay, finally, we have Francois Trahan, President and Strategist of Macro Institute, based in the USA. Francois is an economist by training with a master's degree in finance and econometrics. He is currently president and founding partner of the Macro Institute, which is a firm dedicated to macro research and education. Previously, he was a managing director at UBS, where he led the US portfolio strategy effort. And prior to that, he was a founder and managing partner of Cornerstone Macro. Francois received undergraduate and graduate degrees in economics from the University of Montreal. Welcome, Francois.
Thank you, Rob. Thanks for having me.
Cool. Okay, so we have a pretty large and asynchronous audience as well. I see we're ticking at over 1,000 here, folks in the room. So please do submit questions as we go into the Q&A feature. You can upvote, by the way, on questions, and we'll see if we can skim from the top of that in the final few minutes. So I have selected several of your questions submitted ahead of time to put to the panel. And so look forward to me going through some of those I chose from that list. So to kick things off, I thought it'd be helpful to learn from each of our guests how they wound up as investment strategists, what they do today, and also what they love most about this role. Let's begin with you, Gina.
Okay, sure. So how I ended up as an investment strategist, I think it developed relatively organically. I started working on the buy side, was in a communications focused role, doing a lot of portfolio attribution, understanding the performance of portfolios. I ultimately got connected with the CIO of a fund company called Evergreen Asset Management and did a lot of writing. As a function of that role, worked with the economics team quite a lot, ultimately transferred over into the economics team and worked as an economist, and then got back to markets as a strategist after about a decade as an economist. So it sort of just developed organically. I think the best way that I can describe it is I just discovered very early in my career that I loved the puzzle of the markets. I loved connecting the macro with the micro, understanding what moved stocks in particular. At the very early stages of my career, was just exposed to the portfolio management process. So, I knew I loved it. In terms of what I do now, I run a global team of market, thematic, and fund and ETF strategists. We're nearly 40 analysts total all over the world, covering the markets, creating portfolios, doing analysis on the markets. We have a very data and model-centric approach to the markets, which I think resonates with our client base because it is somewhat unique. Nothing is particularly opinion-based. We do task ourselves with finding the data resource, finding the model resource that provides the intelligence. And then we also develop thematic portfolios as well as systematic portfolios for client utilization, and we cover the industry. So we analyze what's happening in the mutual fund and ETF industry in terms of product proliferation, but also focus, understanding the developments as they occur in the industry as well. Pride ourselves in having a fairly soup to nuts product that covers the world. And that's what I do with the vast majority of my time is create the content, coordinate the content across the markets, help my analysts develop their careers and their franchises dedicated to understanding the markets and creating portfolio strategies.
And what do you love most about it, Gina?
I think I like the variety most. If I were to say one thing, it's that there is just an endless amount of challenge in covering the markets. It's also constantly different. Every day is different. There's a core focus in content creation, communication of that content, and then coordinating that content around the world and helping individuals contribute their unique aspects to the whole. But it's different every day. Every day I might be in front of clients. I'm in Boston today, getting ready to go do some client meetings, also meeting with my analysts anywhere from Sao Paulo to Dubai to Singapore to think about their content creation, or getting in front of the media, doing a presentation at an investor conference, joining a webinar like I am this morning. But every day is different, and every day in the markets is different as well. We never get to the point where we know everything. There's always something new to explore, always some model to retest, rebuild, rethink, and I love that about the job.
Cool. Over to you, David.
Well, so like Gina, sort of happened kind of organically for me. I started out in Ireland. My father was a politician in Ireland, and not very originally, I decided I was going to follow in my father's footsteps, become a politician. But he was a lawyer, and I felt that Ireland's problems were mostly economic at the time, and so I really need to know something about the economy. So I did an undergraduate degree in economics. Then I came over to America to do a PhD in economics. Met a girl from Grand Rapids, got married, decided that I liked America. But the thing about economics is, I'm fascinated by economics. I'm really an economist at heart. It's a whole different perspective on the world. It's a way of seeing the world. And I love economics, but I also realized that wasn't a great way to make a living. And there were also interesting things you can do with economics. So I went from being an economist to I worked for Lehman Brothers, worked for Putnam Investments as an economic advisor. But I also, uh, early on when I was working for Lehman Brothers, I realized that people in the sell side didn't take you seriously as an economist. If you, it didn't matter how many PhDs you had in economics, if you didn't have some credentials which suggest you understood about markets and the real world of markets. So I got my CFA designation while I was working for Lehman Brothers and went off to work for one or two other companies, and ended up um, working for Putnam Investments. And that was a different job because what they needed was somebody who could talk about markets. And my mentor and boss at the time, a guy called Bob Goodman. He used to make speeches with no notes at all, no slides, nothing. He would just get up there and stand in front of people, wave his hands around, and he was a compelling public speaker, and still is. But he, but then I realized I had this latent speaking gene. And so I discovered I could actually make a pretty good speech about the economy and markets. And so I really developed those communication skills. And over the years, I've really focused on talking about and writing about the economy and markets and how it affects investments and what it means for investors as clearly as possible. And then in 2008, I moved over to JP Morgan Asset Management, and I now get to run the Market Insight Strategy team, which is about 30 analysts and strategists all over the world. We produce something called the Guide to the Markets. We produce it in 7 different versions around the world, in I think it's like 12 different languages, and various other products. But the center of what we try to do is we try to understand. We do a lot of deep research on different aspects of the markets, of the economy, of the whole evolution of the global financial system. But we try to explain it to investors clearly. We think that this is the big gap in Wall Street. There are too many people who are trying to prove how smart they are. There are too many people with a political bias one way or the other. There are too many people who just won't make it simple for people. So what we try to do is look at the complexity, but then see how can we make this simple? How can we show it in a chart? How can we express it in a phrase? How can we make it colorful? How can we get the point across to the end investors? Because I've always believed investors are smart. It's just we baffle them with jargon, and we bore them with just going on and on. So if you can just make the point concisely and clearly and vividly, you can be really successful. So over the years, I've had so much fun running this team in JP Morgan, and we do, as Gina was saying, we do a lot of, every week is different. Markets are always changing. It's always challenging, fascinating. But it's to me, it's really about analysis and communication.
Gotcha. So I'm hearing communication, I'm hearing economics as well, being a common theme. Francois, over to you.
Okay. I really like the term organically that Gina and David both used. I was going to say I became a strategist by accident a little bit. But what I mean by that is that I didn't set out to become an investment strategist. My first job out of grad school was actually working for the government. I worked for the Department of Finance in Ottawa. But I did that for 2 years, and then I got hired by what was a small company at the time called BCA, stands for the Bank Credit Analyst Research Group, which is a macro think tank that's been around, I think, since the 1940s. And I worked on a product called the Investment Strategist. So that was kind of my introduction, if you will, to the world of research, the sell side. I like to think of it as my second master's degree in a way. What I do now, I still publish institutional research. So the same thing I've been doing for 30 years. And I also run an education platform called the Macro Institute, where we offer a course called the Macro Specialist designation. What I like the most about what I do, and I think that I would have answered this differently, Rob, in different parts of my career. I think early on, I remember 30 years ago, being asked to go to Europe to visit clients. I couldn't believe someone was paying me to travel. So I used to love the travel. That faded over time. I think now, what I would say is research is really what I love the most. I do find, the education part of what I do very fulfilling, but at the heart of it, finding when you have clarity on the markets and the economy at a time when no one else does. So sometimes, you just happen to figure it out when consensus has it. To me, that gives me a big thrill. And so the research is ultimately what I love the most.
Excellent. Okay, very good. Some common themes coming through there. Let's dip into the questions from the audience. First one's for you, David. So you're a strategist on the buy side, and you've been on the buy side most of your career. How does the buy side strategist role differ from being a strategist on the sell side?
Well, I was briefly on the sell side when I worked for Lehman Brothers. And by the way, I left Lehman Brothers long before they blew up the world, so it wasn't my fault. I just want to make that clear. There is I found there was a rather interesting difference. When I was on the sell side, you had to say something different. Please give me a non-consensus view. The problem is, as we economists know, consensus is rather smart about these things, and particularly in economic numbers. If you decide you're going to go 2 standard deviations away from consensus, guess what? You're very likely wrong. But what I discovered on the sell side is no matter how absurd their view was, so long as you could spout some piece of nonsense and with conviction that was very different from consensus, you would get a hearing. Now, on the buy side, it is a little bit different because in the end, a lot of times you're advising the people who are advising individual investors. They don't need to beat the markets. They need to avoid making stupid mistakes and getting too excited or too scared. They need to basically invest broadly. And very often, they don't even appreciate what consensus among strategists and economists is. So if you don't have to worry so much about coming up with a non-consensus view. Like Francois, I'm always there's always a little bit thrill of excitement when you discover that the world has got it wrong and there is something going on that people haven't quite figured out yet. I love doing that and talking about that, but I don't mind very often giving views which are quite straight down the middle, so long as I'm expressing something clearly to people that people don't normally get. Because a lot of people, don't really understand what a reasonable economist or strategist would think about the state of the world, or the state of valuations, or an appropriate portfolio. And so, to me, in the buy side, it's much more about explaining it clearly to the average investor or the average advisor, so they can explain it to the average investor, rather than coming up with a non-consensus view.
Very clear answer. Thank you. Yes, that makes sense. So on the sell side, you've got more of an imperative to be out of consensus to attract attention, basically.
Yes.
Okay, Francois, on to you. So you mentioned your history going back to BCA. You have a great perspective in terms of how things maybe have or haven't changed. So what couple of things have changed the most about investment strategy since the 1990s? And what couple of things would you say have changed the least about the profession?
Okay, that's a great question. What's changed the most, I would say, is the street's perception of macro. And so you have to remember the 1990s is the ramp up to the tech bubble. And so, in those days, macro, in the eyes of many, was kind of a dirty word. I would often meet investors that would say, we buy companies, and people that didn't care about macro. And I think that changed sometime around the GFC. The markets became dominated by macro events. And nowadays, obviously, it's viewed very, very differently. But in the 90s, it was still, the world of picking stocks, and macro was viewed as secondary. What's changed the least, or what's similar? Well, it's still human beings making investment decisions. And as David mentioned, human beings have a lot of biases. Obviously, right now, the political bias, I think, is huge. So that's the commonality, I think, not just between today and 30 years ago, but 100 years ago. The one common bond that you'll find in every mania or asset bubble. It's humans that were trading stocks. And so to me, that's what hasn't changed. It is still 100% the same.
Got it. So human nature, constant. Okay, Gina, thinking about the industry a little bit, so we're all quite aware of the shift from active to passive that's taken place over many, many years now. How's that changing the investment strategy? I think you mentioned you look at ETFs a bit earlier. Maybe that's got something to do with it. So how do you think that shift has altered the role of being an investment strategist?
Well, it's given us many, many more products to track, which is a wonderful thing. So we can use the ETF industry as a proxy, for instance, for markets, which has allowed us to do so much more in terms of quantification of trends. I think that there's also a lot more to discover and write about with respect to what's driving stocks at any given point in time, what's driving markets at any given point in time can be related to what investors are investing in, the product itself. Can create concentrations which are worth exploring in strategies. Mostly, I think, though, that it's just opened up the world of opportunity to investment to a greater share of investors. It's created an investability for many, many asset classes that were not investable for the retail investor years ago, which has allowed for proliferation of financial products, allowed for creation of wealth for a greater degree of investors. I mean, one of the things I like most about being at Bloomberg is I'm not segmented to talking to any specific investor type. So in any given day, we might talk to an asset owner who owns a certain product set, and also a trader, a retail trader trading their own book, who is interested in the movements in various asset prices or individual securities. But I'd say broadly, the thing that's changed the most is just the proliferation of product has allowed for more. And we do this ourselves because one of the things that we do inside of our team is create thematic universes that ultimately feed indexes that ultimately become licensed ETFs in our provider base. So there's those ETF products are very active by nature. They're not necessarily passive. I think that the universe is constantly changing. What we're spending most of our time doing in our ETF work now is not covering ETFs as a passive entity, but covering the active strategies that are evolving inside that asset structure. And I think it'll constantly evolve. So it goes back to the original thing that I said is one of the things I like most is the constant evolution, the constant challenge. And this active passive ETF versus fund wrapper sort of progression throughout time is one of those challenges that we follow in depth.
Sounds quite nuanced. Very good. Francois, you mentioned politics. Forgive me, I'm going to quote here. I think you probably saw a couple of weeks ago, there's a very famous quote from a fund manager, Daniel Lowe, on X. From Third Point, he said, "We are born alone, we die alone, we navigate the Trump stock market alone." So the question for you is this the best of times or the worst of times to be an investment strategist?
Well, that's not an easy one to answer. Selfishly, I want to say that it's the best of times. I really like Gina's analogy, puzzle analogy. And, you have a greater need for investment strategy when you have a complicated puzzle. And we have a new administration that's using very unconventional policy tools. And so that's a puzzle to figure out. We have an economy that is very different than it's been in the past. And by different, what I mean is more sensitive to inflation. And we have, a stock market at S&P 500. It's also very different than it's been historically. It's very growthy. And that means it will respond differently to, certain macro developments. So, from my perspective, this is one of the most interesting backdrops I have seen. And I feel like the more complicated the puzzle is, the more of a need there is for investment strategy or people to figure it out, if you will. So I think it's the best of times. Absolutely.
Got it. So back to that puzzle analogy that Gina used. That's great. So the puzzle's now more complicated than it's ever been, Francois.
Yeah, I mean, between the policies, the economy, the stock market, there's a lot of things that aren't textbook, if you will. And that's what makes it complicated, but at the same time, a great challenge and fascinating.
Very good. So Gina, you mentioned you have a team. I think you mentioned, gosh, 30 plus folks around the world publishing. I did go on your bio page a few days ago. I counted, 74 research nuggets from the 1st to 18th of March linked to your name. So I think what people want to know is sort of time allocation. I think you hinted at it earlier, talking about content creation and communication and getting in front of clients and so on. But in a typical month, so say it's not a vacation month or earnings season, can you walk through the kind of big buckets of your time allocation as a strategist? So between, fundamental research or all the buckets you mentioned, and maybe some I missed as well. Would love to get a flavor of how your kind of typical day-to-day breaks out through the year.
Oh, sure. I mean, how much time do you have? So something Francois said really spoke to me, and that is this has been just an absolutely fascinating environment. That's probably why we've been so prolific, is there is so much to talk about. There just are so many issues to dig into, whether it be the tariff risks that are definitely evolving, or the potential for a currency regime change, what's happening with rates, to what's happening with earnings. And by the way, I'm not sure there is a single month where there aren't some earnings to absorb. So I don't know if I could really pontificate about what that would look like. But nonetheless, in terms of, what do we do on a day-to-day basis? We run 9 different models for the US equity market alone. So what we're doing the vast majority of time is assessing the output from those models. How is the output changing based upon the moving data streams that we have in existence? How are the models working? Are there ways that we can tweak the model to better account for changes that are happening in the marketplace? What's happening with investor flows? How are those shifting over time is something that our ETF and fund team works with prolifically. And then what's happening in the private markets that's going to feed activity in the public markets over time is something we're watching about very carefully in the thematics world, because we want to be in front of the investor base in terms of developing thematic strategies that are going to resonate over time. So, the day-to-day really is reassessing those models predominantly, thinking about how we should be accounting for changes in the marketplace to structure our market strategies and portfolio strategies, constantly going back to those models to write our content and feed our thought process, developing new models as they come. One of the things that happened over the course of this year, of course, is a tremendous amount of tariff risk has emerged. So we went back and we built a supply chain model to analyze second and third level exposures of every company in the S&P 500 supply chain outside of the United States. That was a huge endeavor that we had to go through. That was a real-time response to what was happening in the marketplace. We've been testing currency risk for the equity markets over the course of this year, as well as all of these rumors of a potential Mar-a-Lago Accord have popped up. What happens in an environment where you have a massive currency regime change? So I think that's the best way I can describe it, is we're constantly just reassessing, trying to be in front of the market, trying to understand how things are changing in our models and provide that intelligence to the investor so that they too can, presumably create portfolio strategies that will perform well and manage the risks that are evolving in the marketplace.
Very good. Thanks, Gina. Didn't appreciate the how the whole thing's built on that core model. That's very interesting. Now shifting tack a little bit, David, talking about research marketing. I saw a great LinkedIn post from you with a picture of a nice deer in it in the nighttime on the road somewhere in upstate New York, I'm guessing. The post was called The Wait and See Economy, talking about the way deers are very indecisive creatures, not sure to jump left or jump right when the most important thing is they get out the road. So I think you're using that as an analogy for investors to not freeze, is my guess. Would you say that how much of a thing is it these days for investment strategists to have to be out there on social media promoting their latest thought leadership? Is that a new thing? Is that a growing thing?
Well, it is a new and growing thing. I mean, when you were asking Francois earlier on about what has changed over the years, to me, one of the things that's changed is the way that we communicate. I've always done speeches at conferences, and we got going on conference calls. I think we had much bigger conference calls than other people for a while, so that grew. But now we do you know, a lot of webcasts, a lot of Zoom calls, but a lot of LinkedIn, social media. We do a lot of podcasts also. There are multiple dimensions of how we try to get our message across, including, of course, television and radio. But I think social media is part of it. I must say, you know, I do my notes a week ahead on LinkedIn every week, but I do it as part. I then record the whole thing as a podcast on Spotify and Apple Play. And what I try and do with each of these episodes is, I mean, first of all, you kind of do have to be there, but you also, you know, you try and put together a story or analogy so average people can sort of get the point. And the point about the deer in the headlights is actually this: there's nothing wrong with freezing and taking a look or waiting to see what's going on. The key issue is, where are you positioned? If you're like a deer in the middle of the road, you are going to get hit. If you're off to the side, you can watch without much problem. And equally, going into this year, the real problem was not that it's a year of higher volatility, higher uncertainty because of all these policy changes, but did you come into this year way over concentrated in large cap growth equities in the US with more risk than is appropriate for where you are in life? The issue is not freezing to see and waiting to see. The issue is where you're positioned when you do it. And you know, so we do work a lot on trying to get this right. But I think social media is growing. We don't know exactly how it affects the business. I think in to be honest, in a working for an asset manager, part of it is getting attention. And so we want people to hear our ideas. We want people to be familiar with the ideas of JP Morgan Asset Management. Obviously, our portfolio managers are the ones who do the real work in trying to get the alpha in their portfolios and try to provide the superior performance, which is really what our product is. But you know, social media is part of communicating with every generation, but of course, particularly the younger generations.
I see. So is it fair to say investment strategists are now influencers? That's kind of part of the mix.
I think they always have been. I think they were influencers before influencers was a word.
Very good. Okay, let's talk about some skills issues. So Francois, now you've got several accolades, several of you have actually from Institutional Investor, but I'll ask this question to you. So what do you think are the top 3 skills, traits, or attributes that are pivotal to attaining those very highly prized Institutional Investor awards as a strategist?
Well, that's not a simple one. I think David might have a different answer in terms of what's important for a strategist for the buy side. But overall, I think it's 3 things. I think you have to be good at research, obviously. Ideally passionate about it. Number 2, you have to be able to write concisely. And number 3, public speaking. And so to me, those are the 3 things. I don't think you need to be a master of all 3. I would say I'm pretty good at all 3, but I can point to people that are better than me at research, at writing, definitely at public speaking. But you have to have a certain level in all 3 or consistency, if you will. If there's one that's more important than the others, I think it is probably research, because that's the basis ultimately. If you can't do research properly and have something interesting to talk about, well, there's nothing to really communicate other than just rehashing the news, and that just won't cut it as an investment strategist. So, you know, and if you're good at one of them, well, then you know to invest your time. You know, if you happen to be really good at research, you can take a writing class, you can take a public speaking class, you know, to bring you to the level you need to be. So to me, those are the 3 things. And again, I think from a buy side perspective, you know, maybe that would be a little different. On the sell side, we obviously write a lot, and so that part becomes important. But it's research, writing, and public speaking.
Gotcha. Very good. Okay. So Gina, I did see some demos recently on Bloomberg about the new kind of AI suite you're kind of building out. So moving to a different skill here. So I saw, you know, people digging into call transcripts and doing company searches using Gen AI, natural language prompting to generate charts. In particular, I thought, wow, that's a huge time saver. I think the LabGo suite. So it seems to me there are some pretty big time savings maybe for some of the key things Francois was talking about. So perhaps building research, if all of a sudden you can ask for a chart with lots of different CPIs, let's say for different markets over a different chosen time period, and in 10 seconds you get it, that seems to me to be relevant, to a relevant skill perhaps. So what role would you say AI plays today? And what role do you think it's going to play in the next, let's say, 2 years for the investment strategy workflow?
Well, I think that you hit the nail on the head with efficiency. I think that AI right now is playing a very large role in enhancing the efficiency and productivity of the research analysts on our team. It's been a huge time saver from the perspective that you mentioned in terms of integration in the terminal, being able to access information, aggregate information, and then manifest that information in content. So it's very much so a productivity enhancer and an efficiency tool. You know, where it's going to be in 2 years, I think no matter what I say, I'm going to sound foolish. So I think I'll push the productivity and efficiency button even harder, because I don't know that we know where it's going to be in 2 years. I think it could certainly continue to drive much greater efficiency for research analysts. And we're still discovering, frankly, ways that we can embed it in our content creation process and our model building process. We have a team of data scientists that also works with our strategists around the world, and they've been, a hotbed of just trying to get in front of technology developments as they occur and embed those technologies into our process. I mean, I think about where we were 30, 40 years ago, there was no Python coding embedded in a strategy platform at all. And even the evolution of technology is constant in our process. And I think AI will be that next level tool of technology enhancement to provide greater efficiencies, greater productivity, and hopefully greater intelligence that we can ultimately provide to the investor.
Gotcha. Okay. Definitely sounds like a core part of the toolkit then. So David, talking on communication as a skill, you mentioned it a bit earlier. I've seen you speak at several conferences. And indeed, I would agree, you're pretty well known for your ability to simplify complicated topics into kind of these sort of these nice little nuggets. So fair to say that of all three of you, in fact, I've seen all of you speak at various conferences. But David, question for you. Is it fair to say the ability to kind of tell original sort of gripping stories is absolutely crucial job requirement to be an investment strategist, as in, if you're not really able to swing that or not comfortable, this may not be a job role for you?
Well, I think it's being able to communicate verbally is pretty important, but I think a lot of people can get a lot better than they think at this. I mean, there's some people who are just naturally not good at it, but a lot of people just hate it because of nerves and so forth. And you've got to just get over that and get over yourself and realize that your job is to get a point across. Once you're entirely focused on getting your point across, then sometimes it'll come to in stories, but I don't like very elaborate and sort of prefab stories. I'd rather have something that sort of comes naturally to you as says, well, it is really like this, or even a phrase. If you can just, last week I wrote something about fiscal fudge because there are going to be certain fudges in the way that the Republicans cook up this their budget. Well, they're in power; they're the ones who are going to put it together. But just the phrase itself gets the point across. And so I think it's an important skill, and I think everybody should work on it. I'll tell you the best way to work on it though is just go do it. I mean, I learned how to basically speak. I would say in tours of Ohio and Alabama, where when they just put me up in front of a whole pile of investors, and I had to go for it and just tell my story. And by Thursday evening, you're exhausted, but you're telling your story over dinner to a group of advisors, and you're on fire, and you're thinking, boy, this is the clearest I've ever sounded on this. And it's just, you get the skill. Remember, we're born with this and we forget it. It's kind of like swimming. A lot of babies can swim, forget how to do it. You're actually born with the ability to communicate. Have you ever seen a teenager tell their parents why they need to have some money or go to the concert? We have this innate ability to get the point across, and then somehow we lose it, and we get all worried about what will people think about us. And stop it, just do it. So I think people are scared of it, and people say, oh well, I can't be a strategist because I don't really do that. Yeah, you do. I mean, I would say 80% of people do this. There's 20% of people who will just get lost in the woods, and they're incapable of getting to the point. But I think a lot of people have got much more potential to be speakers than they really realize.
To get over stage fright, basically.
Yeah, exactly. I mean, at some
There we go.
stage, the best movie advice I ever saw, and I won't say it exactly, but was that being able to say "what the fudge" is really important. If you
Christmas
just say
story.
"what the fudge" and go for it,
There you
then
go.
is that's really the key.
Okay. Switching gears, talking about different asset classes. So, Francois, I know from your courseware at the Macro Institute, which is very good, by the way, you mastered all the major asset classes over your career thus far. So, to what extent do you think investment strategists have to master all the major asset classes, or is it dependent on their asset class focus?
I think it's actually critical, Rob. I don't think you can have an opinion of the S&P 500, for instance, without having an opinion of interest rates and its influence, whether it's inflation or the Fed, et cetera. The reality is that, things that influence other asset classes are going to have an impact on some segments of the equity market, for instance. And so if you're bullish bonds, well, it's usually a good sign for PEs in the stock market. It's going to especially favor the growth segment of the market, which is more sensitive to interest rates. If you're bullish gold, probably means inflation's moving higher. That will give you a different conclusion on bonds. It'll, make you concerned about not only growth stocks, but rate sensitive stocks. And so I think because of the feedback effects, of macro to all these different asset classes, I don't think you can be really just focused on one, and close out everything else. It can be I've had the title of chief equity strategist at some point in my career, but the reality is I still had to talk about, Dr. Copper, Dr. Housing, bonds, inflation, commodities, et cetera. It's all part of one big puzzle, as Gino would say.
Gotcha. Very good. Good. Great. Back to the puzzle analogy. I love it. So let's get deeper into that puzzle then. David, you have a PhD in economics. So how's kind of coming that economist route? In fact, we heard from Gina as well, started. Yeah, in fact, all three of you actually would launch, I would argue, with based on economics, based on what you've been telling me. But David, question for you. How's kind of coming that academic economist route help you land and succeed in your current role?
Well, it's I mean, to some extent, luck. I mean, it's just you just manage to interview eventually for the right jobs in the right places. So I think two crucial jobs. I think first of all, if you have good academic credentials, I mean, never doubt the value of good credentials. So you got to do well in your education. But eventually I managed to get a job at Putnam Investments, and they're looking for a strategist who could make speeches at the very time that was what I really needed to do. And similarly at JP Morgan Asset Management, they were looking for a strategist, and it was just what I had to offer. So I think in anybody's job search, it's always going to be tricky. But I think again, it sort of kind of gets back to that communication skill thing a little bit, because you're in the interview process. You're one of a gazillion resumes out there, but what is it, even when you're one-on-one across from somebody at a desk, what is it that gets you to the next round of interviews? And your ability to make some impression, some emotional impression upon that person on the other side of the desk, say, that's a really interesting person there. Maybe we should listen to them again. That actually is probably what allows you float to the top of the pile and actually get the job. So it's a bit of luck. The jobs have to be open. You have to have connections. Always ask people, knock on doors, ask people for help. Don't ever be shy. The things I've regretted are always the phone calls I didn't make or the conversations I didn't have, not the ones that I did. So you have to knock a lot of doors, but also make sure that in the communications process you're able to get across some ideas that make people think and have an emotional connection with them.
So thinking about that interview process, actually, Gina, probably one question folks are going to be getting is going to be about data analytics, is my guess. So how important would you say are the quant and data analytics skills for junior strategists these days? And what would you look for in terms of evidence of that for someone looking to join the industry?
Absolutely critical is the best answer that I can give you. In terms of joining our team, we put analysts through an actual testing process. So we test their ability to analyze financial statements, but also aggregate data. It's sort of very classic, traditional understanding of index construction, as well as financial metrics for companies. And then we also put them through a Python test. So it's just it's just a part of life. As we go through, especially because our approach is very data and model centric, as I mentioned, we're not sort of pontificating about where things are going. We're proving why certain indicators matter. We're proving why, some indicator may move certain segments of the equity market over time, or trying to analyze what an indicator means for segments of sector rotation or market performance. So we in our team absolutely consider it crucial. There are analysts certainly that I've hired in more senior level positions that don't necessarily have a data framework. They're more policy related analysts who might have a law background, for example. We have those analysts on our team. But from a junior perspective in supporting the data endeavor that we have, every analyst goes through the same testing process. That's a pretty simple answer for me.
Sure. Python test, that sounds scary. Okay,
Yeah.
not sure I'd make
Certainly
it through
scary for me.
that. Okay, so Francois, I think you've written about this in the past, the gateways in which people come into the investment strategy role. Fair to say that the three job roles I remember being gateways: equity research, credit research, financial market economists. Are they still the main gateways, or have things changed since I've been out of the mix?
No, I think those are still the three broad categories. I think, look, the world has changed dramatically. We didn't have LinkedIn 10 years ago, or at least it wasn't popular the way it is today. We didn't have social media 30 years ago. And so I think there's more certifications out there. So I think, we have to keep an open mind that there might be different trajectories, but overall, I would say that's those three broad categories are, cover it well. I'd put myself in the financial market economist bucket, but, my first job at BCA, I worked on the fixed income product. And so, in my mind, someone that's able to blend more than one of these in their career experience will have an advantage over others. I think starting in fixed income, I always say that my equity friends tend to be glass half full type of people. My fixed income friends are paid to look for problems. They tend to be glass half empty type people. And so I think having an exposure to both worlds, will put you hopefully somewhere in the middle and avoid some of those biases. And so, in my mind, being able to rack up, even if it's short experience, but experience in more than one of these buckets, I think really sets you up well for an investment strategy job.
Gotcha.
And
Okay,
obviously, Gina, I think is correct that you do need, a certain amount of analytical skills. I don't think I'd be able to pass that Python test, but
me neither.
um,
Very good. Another firm, obviously, with a big AI focus is JP Morgan. So, David, a question for you. If you saw a young person today aspiring to be an investment strategist and was looking to impress a large asset manager with their AI skills, what sort of things in 2025 would impress you on a resume when it comes to being on the cutting edge of AI at the junior levels?
It's a sort of interesting question because I feel like AI is this I don't know if I want to call it a monster, but it is this technology that is evolving so fast that I'd be rather weirded out if an 18-year-old was really master of all the things that AI was able to do or how it's progressing. I don't think any one person is going to be able to have a that much greater an insight into the whole scope of what AI can do. The thing that I would be looking for is I look for it's not so much technical skills, and we can obviously try and measure those, and I think we've got lots of ways of filtering them. But I like to see people with sort of an engineering background, people who've shown some, engineering math or something, so we know that they've got some quantitative aptitude. But the thing that I think is often missing here is an ability to write. And I think, I don't look at research and writing and quantitative skills and speaking skills as different things. I think that your ability to research something and then to write about it, when you write about it, you realize, wait, that's what's wrong with the model. I needed to put that in the model. Or this is why this thing, why we've got an outlier here. And then equally, I find when I'm making speeches, in the middle of it, I wish somebody would actually sort of write down the phrase that had just dawned on me as I was talking, because that's when your mind makes that connection. Aha, it is just kind of like that, but this is the problem with my argument. I wonder did anybody notice that? And so I think that as a researcher, I think what impresses me, to be honest, is somebody who can write really well and who loves reading. If you want to be a good writer, read. If you want to be a good speaker, listen. But I think that a lot of people are so quantitative. I don't want to say I take quantitative skills for granted, but a lot of the candidates I see, I think, do actually have those quantitative skills, in very heavy doses. What I want to see is also an ability, a love of reading and a love of actual writing with the pen. I know that's a very weird thing, but it's I think these are old human skills that we're sort of discarding in this world of AI and texting, which may actually be dumbing down the population. I'd rather have somebody with 19th century skills than 21st century skills in many ways.
Reading, writing, and arithmetic. There we go. The three
Yes.
R's. Francois, someone's asking, when I read the press, most strategists who are quoted seem to work in the world's major financial centers, principally New York, London, or Hong Kong. Do I need to find my way to those hubs if I want to become a strategist, or is it better to try to be a strategist where I am first in Sydney and then transfer?
Okay, well, there's going to be more of those jobs in the big financial centers. And so I would say odds are yes, but there's plenty of opportunities to be an investment strategist elsewhere also. I wouldn't I wouldn't think about it that way. If you can get into a training program at, one of the big banks, you should absolutely do it. That is a phenomenal opportunity. So I wouldn't close out anything like that. That said, I think it's easier to get local experience and leverage that into finding a job at a big financial center. This is not a conventional way to think about this, but I actually think that particularly in the early stages of one's career, to switch jobs frequently is a plus. I realize some employers look at that as a negative, changing jobs every 2 years. But I think it allows you to gain, experience or hopefully leave with the best things from that firm and that experience. My father had one employer his whole life. And so when I switched jobs frequently early in my career, he thought I was completely insane. I think David also, said something really important, which is to read a lot. I find, to get one of those jobs in a big financial center, you're going to have to interview well. And to me, one thing that stands out in interviews is someone who's well read, who has some sort of historical perspective. And so, we've talked a lot about the quant skills, and those are important, but everybody has them nowadays. What's going to make you stand out is having that broader knowledge to be able to say, do you remember, in the 1970s, great inflation, yada, yada, yada. And so even if it's superficial knowledge, I think that still gives you, some sort of oomph in an interview. And so I wouldn't close out any possibilities, but I think I would try locally and, and leverage that into a job in one of the big financial centers.
Gotcha. Good advice. Thank you. Still on recruiting, Gina. So do you have any examples of non-traditional hires into investment strategy that have worked out well on Wall Street? And if you've seen that, I'm curious what drove that sort of success?
Yeah, I do, because we also have a policy and litigation team where very non-traditionally we hire attorneys. So that's the first thing that comes to mind. As I mentioned, we do look for a wide array of skill sets. I completely agree with both David and Francois that there is a lot more to being a strategist than simple quant skills. So I do think that we want to hire initially, at the very least, a broad framework of quantitative and financial analysis skills coupled with communication ability. I think, frankly, as long as you're passionate about your field and curious about your field and able to create and discover, those are the really key characteristics that we look for in an analyst. If you're very passionate about your subject matter, you're going to dig deep. You're going to look for relationships. You're going to get creative in how you discover relationships and create portfolio strategies and ultimately communicate to the investors. So I think that creativity and passion are extremely important. I would pile on with the reading and say, not only read, but show some creativity in your ability to articulate concepts, bring your own voice to the subject matter. I get questions all the time from people. What should I be reading? What should I be, who should I be looking at? And my answer is always the same. You should be looking inside yourself. For while you're reading, you also need to be able to discover how you would approach whatever subject you're reading about. And so one of the things that I interview for really prolifically is just creativity. If, I would put a question to any analyst that comes to my team, what are we doing that you think we're doing wrong? How would you reassess this model? What would you bring to the table that's different? Because I think that bringing your own unique voice to this universe is so critically important. Not just being able to parrot what I'm saying or what one of my analysts is saying or something you read in the Wall Street Journal, but critically analyzing that and telling me why you see it differently is a key skill that I think is incredibly important for people to develop. Discover yourself, discover your new unique aspects, and bring those to the table.
Gotcha. Very good. Might have a time for one or two more here. David, we'll see here. So we do have a pre-submitted question, pretty interesting. Say you work at a broker-dealer or asset manager in research. How does a single security equity or credit analyst make the leap into the strategist role? Do you just raise your hand? Do you wait for a junior strategist to leave? Do you ride someone's coattails, rotation program? Any guidance appreciated? This may be the last question. So David, over to you.
Yeah, no, I don't unfortunately that isn't the role the road that I followed. But I would say always, what Gina said, absolutely have an opinion, express an opinion, get to know people, have coffee. If you're in a big bank or big institution, take advantage of it, meet with people. HR is all about moving people around. Actually, people love to sort of mentor people. So just take advantage of it. There are many more degrees of freedom. You've got much more freedom to do things than that question implies. And so, as Francois said, if you're in an institution which so boxes you in that you can't make that leap, then sorry, go diagonally to a different firm. Find your joy somewhere else. But don't feel boxed in just because you're in a particular role. The light should emanate from you also.
And that is a great place to end it. So I'm going to thank our panelists here for being so generous with your time and sharing your wisdom on the investment strategy role. Much appreciated. Thanks to the audience as well. Unfortunately, time has run against us. So thanks to everyone for partaking.
You're very welcome. Thank you.
Thank you very much. Good luck, everybody.
Thanks for having me.